In this video, I'm going to go over the 5 basic levels of stock market investing. I put timestamps in the description, so feel free to skip ahead. Now, a stock is just a piece of a company. Think of it as a huge pie, and one stock is just a crumb. If you own a crumb, you own part of the company. So instead of paying millions of dollars to become part owner of a company like Google, you can buy a share for just about $100. Better yet, you can even buy a fraction of a share by investing as little as $1. Even better yet, you can like, subscribe, and comment for free. Now, as part owner of that company, if the company does well, then your investment increases and you can sell your share for a profit. Or you can keep your money invested and take a dividend, meaning that the company will pay you out annually for having invested in them. Now, there's 2 main ways to invest in stocks: individual companies or funds. Single stock investing is when you handpick companies like Coca-Cola or Netflix. This is great when you really believe in a particular company and you think it's going to do well. However, if you pick a bad stock, you could end up losing money. You can divert some of this risk by investing in multiple single stocks. So instead of putting all your money into Apple, you put some money into Microsoft, Tesla, Google, Amazon, etc. Then if one of those companies goes under, you still have the rest of your investment. In case one of those pops off, you could still make a very large profit. Now, ETFs and index funds follow the same concept, but to a greater scale. If you want to invest in all the tech stocks out there, there's a fund for that. Health stocks? Yep. Renewable energy companies? That too. You can even invest in a fund that follows the entire stock market, like VTI, which is literally like investing in every single publicly traded stock. You put in $100 and it gets spread out evenly amongst thousands of stocks. These are great investments that can yield you, on average, 8 to 12% a year. So not only is this method a lot less risky than picking individual stocks and trying to pick one that does really well, but it has a pretty solid return too. Now, one way to potentially make more money is by using other people's money. I'm talking about margin trading. Margin trading is essentially using a loan to invest more money than you have in the stock market, which you can only borrow up to the amount that you have invested. So let's say there's a stock called XYZ and you really believe in it. You have $1,000 of your own money and you have $1,000 on margin, meaning that your total investment is $2,000 into XYZ. So now, whatever your returns are, they'll basically just be doubled. Margin is great for experienced investors looking to make greater returns. However, double the upside means double the downside, and you can lose money really, really fast. Which leads me to another great way to lose money fast: options. You may have heard of trading options before, may have even researched it, watched some videos on it, and you probably still don't know what they are, but that's okay. I'll try to break it down real simple. Let's say I bake some pies for $10 each. If they turn out good and delicious, the price is gonna go up. If they taste bad, the price is gonna go down. You're not sure that you wanna buy these pies now, but you want the option to buy them in case they turn out good. So instead of paying me $10 right now, you're gonna pay me 25 cents for the option to buy them if they taste good. If they give people diarrhea, you don't have to buy them. So let's say my pies do really well and I increase the price to $20 per pie. Since you paid me 25 cents initially, you have the option to buy these pies at $10. Now, with actual options, you buy them in increments of 100 contracts, meaning that in that first example, if the price of my pies went up to $20, you'd have the option to buy 100 pies at $10, turn around and sell them each for $20, profiting you $1,000. On the other hand, if they're disgusting and I drop my prices down to $2 because they're not worth much, you don't have to buy them. So options are just another way of leveraging stocks. Basically, you can control 100 shares for a fraction of the price. Careful though, because this can lose you money real fast. Almost as fast as day trading. Day trading is just buying or selling stocks or options in a single day. Now, in order to day trade, you need a margin account and you have to have at least $25,000 in it. This is to stop regular people from losing all their money within a few hours. Now, the stock market is usually a very safe investment, but only when you look at it in the long term. The market moves up and down really, really fast. And if you're making multiple trades in a single day or even a week or a month, you're risking big losses. Disclaimer time, the market has always rebounded from steep losses and declines, but that doesn't mean that it always will. I'm not a financial expert and this isn't investment advice, so please, please, please be careful with your well-earned money. So investing in the stock market is a great way to build wealth if you consistently put money in and just patiently wait. If you don't know where to invest, I've dropped a link in my bio that you can use to sign up for Robinhood, get a free stock on me, and then start investing your money. In future videos, I'm going to go over investing strategies for the stock market and how to maximize your returns and mitigate your risk. So invest in stocks and make money. See you in the next one.